them, how would a bear market affect you? If a bear market's going to affect you negatively, that means you're not invested properly. That means you're using money for your emergency funds, your house repairs, or stuff like that in the incorrect way. That should be in like a high yield savings or like a worthy account or something like that where you can get to it right away. Money in the market should not be money that you're going to need for an emergency. So a bear market shouldn't affect you. If the stocks go down for 2 or 3 years in a row, it sucks checking your account and seeing like, oh, my principal's worse than it was, or it's a lot less than it used to be. But it shouldn't affect you. And it's a very interesting concept that a lot of people don't approach right. And I actually just really like the fact that he approached it correctly, saying it basically the markets go up 10% per year, and that goes through from 1900 to 2025. That's through how many depressions, how many recessions, how many bubble pops and stuff like that, and the market still goes up like 10% per year. The only way that you can actually get all those gains is to stay in the market, because the probability of timing the market is like next to none.
It's a big myth.
Unless you're contributing like monthly or quarterly. If you're not doing that, then timing the market's going to be next to impossible. Plus, you have the psychological component of I don't want to invest in the market because everything's going down type thing going on. So just interesting thing that I think that most people should think about, like if we're going into a bear market, how would it actually affect you? If it's not going to affect you, you're investing correctly. If it's going to affect you, you might need to like look at your setup and like put your emergency cash for your house or your car or your kids or whatever, put that into something that's not the stock market.
Worthy bonds, high yield savings account.
Yeah.
So now my question is, how does the stock market affect you, Timothy?
Like I've been buying, like every time I have cash, I'm like, oh, I'm buying some of that, I'm buying some of that, I'm buying some of that. Everything's on sale. You should be buying right now. You shouldn't be selling. If you're selling, you may need to go back and revisit like our psychological.
You don't have your psychological foundation dialed in, which is
podcast.
step one. Step one of the entire investing success process.